Okay, that's good. Hey Tracy, Gigi. Hi Danish. How is your day? Hey Samina and Dennis. I had only one trade, Dennis, and this is it. Like as mentioned when I posted my watch list, I don't like anything for an opinion range breakout. So my only trade was unplugged later once it started forming a trend or breaking above the pre-market high level right there. And that was it. And I noticed the open was actually a little bit choppy. I didn't like any opinion range breakouts. Did anyone find the open choppy a little bit? Or it was just me? I honestly wasn't even there at the open. I just decided not to trade for like 10 or 15 minutes. And then I came back. Yeah, it was good. Okay, good to hear that. Give me a second to open everything there. And we will go. I actually got lucky that I got filled right at the top right there. I don't think I was like I decided to partial before this daily moving average right there. Actually, when it was zoomed out, it looked so close, so I just decided to bail on it. Let's see. Alright, let's start. Opening the epic pen. This is the epic pen. And let's take a look at your trades, guys. Hey Diego. So Gigi traded INTC right there. And this was 10-minute open range breakdown. Now look at these guys. Remember when we said about the open range breakouts? I don't really go for open range breakouts by 1 minute open range breakout or 2 minute open range breakout. Oh my god, this is horrible. Okay, or I don't know, 5 minute open range breakout or 10 or 15. It's just an open range breakout, and this open range breakout is executed whenever the pattern is ready. In my opinion, INTC was ready for an open range breakout right here once it broke the low of the pre-market right there. And how would I have traded this? I would have shorted it and put my stop loss at the middle of the range. I'm not sure if this would have triggered my stop loss or not. Maybe it would have. So I think I would have removed my stop loss and increased it a little bit higher because it started pulling back to the 95. But anyway, even if this gets me stopped out, I would do the same thing Gigi did here. And I would have re-entered because right now I will have a reverse ABCD pattern right there with the direction of the gap on the daily chart, with the direction of the pre-market price action, and with the direction of all the moving averages and view up. So yeah, this was an amazing entry, Gigi. And I see that you added and you got subbed out. So what was your reason to get subbed out right there? Look at this. When you entered right here for a reverse ABCD pattern, your stop loss was up there and you still were within a range. Like this is the low of the range, that is the high of the range, right? Now, anywhere around here, stop loss should still be the same. After you're taking it for the breakdown, for example, on this week right here, if you take it for the breakdown, or if you take it to the short side for the breakdown right there, stop loss could become the half of this new range and then ride the trend. Then you're having a retest right there for another possible add. Then you're having a 5-minute double bottom and exit all out there. That would have been a good way to edit it. So you exit right there because of the hammer on the 1 minute chart. It is a possible double bottom, but look at this. This double bottom on the 1 minute chart, this right here, is forming against a reverse hammer on the 5 minute chart. Your entry was good. Don't pay too much attention to the 1 minute charts right there, candles, especially if they are within the chop. If this hammer was at the low of the day, I would care about it. Honestly, this candle right here or this hammer right here would have scared me a little bit more, because it also did a fake breakdown and then came back up as a hammer. This right here wouldn't have scared me that much, but still I would hold on for half of the range as my stop loss, because everything else is on our favor. Reverse ABCD pattern on the 15-minute chart, new 15-minute low, new 30-minute low, gap down, reverse ABCD pattern on the 5-minute chart, right, and reverse ABCD pattern on the 1-minute chart, and the only thing which is against you is a hammer on the 1-minute chart. That's it, right? Just ignore it and go with all this right here, because your trade was good, your ad was decent, but the exit was a little bit early. Now let's take a look at what else we have right there. Yeah, exactly. The 5-minute hammer would have also been concerning for me, because I don't go for reverse ABCD patterns against hammers on the 5-minute chart. But I could make an exception if all the bigger time frames are showing me one direction. I might ignore this hammer right here. For a safer play, I would have waited for it to break down below the hammer. Thank you. This is B-Tang. B-Tang, what do you do? So you traded an ABCD pattern type 3 on NEO. Now let's take a look at NEO. So you traded this one. Okay, I wouldn't have taken it to the long side here. Why is that? Look at this. Huge move. Right there. On the 1-minute chart. Double top on the 1-minute chart. Now, kind of a double top, but it's not exactly a double top on the 5-minute chart. Dropping down. Dropping down. Below the 9 moving average on the 5-minute chart. No W shape right there, right? Exactly, GG, no W shape right there. This is a parabolic move. And what are we afraid right here? We're afraid that it might make a reverse ABCD pattern, right? Luckily that didn't happen, and it formed a W shape. That's it. That's the entry, right? The hammer on the 5-minute chart looked good actually. Let's zoom in. So this hammer right here definitely looked good, and taking it to the long side up here wouldn't have been bad. But I think right here at 2690 is exactly after the W shape on the 5-minute chart. Sorry, on the 1-minute chart. Let's take a look at that. 2690, yeah. This would have been somewhere around here after the W shape. So this W shape right here was it. I know you might say that this is W shape, but this is not enough of a W shape after this huge move. You want to see it clearly. You want to see that it's trying to form a reverse ABCD pattern but failing. That's what we want to see. But I like how much you held on to this one. Good partials and good risk to reward, especially if this was your stop loss. Let's see if there are any questions. I did not wait for any W shape. Okay, you actually know that, which is good. Look at this. He realized that. That's amazing. He got 7 Rs when he wanted to get at least 3 Rs. So the price was above the 200 moving average on the 2-minute chart, and the 9 moving average on the 20 were crossing. Okay, I noticed that the price was below view up on the 2-minute chart. I didn't add when the double shape was forming. Exactly. The listing I would have done, especially if I entered a little bit earlier right here, like you did, with the stop loss down there. After the double shape, I would add to my position and move my stop loss. I'll actually share with you my only trade right now, which was today, and it's plug. This is it, and let me show you why I like this thing. First of all, the 30-minute chart. Look at this. The 30-minute chart, we're having a range. We're breaking the range, and I'm taking it to the long side. Daily chart, we're having a new daily high, and I noticed that with this, with how this daily chart looks like, I'm short biased. But we know how the candles move, right? The candle, it could open here, go all the way up, and then squeeze back down and sell off without forming a new high. And this is what I anticipated here. Today we gapped up, so we have a little bit of room to the upper side, and this is why I didn't hold it for a huge trend. You see that I exited all right there. I didn't leave anything for break even or something like that, because we did move all the way up there, get closer to the moving average cross, and this is something I might make a webinar on. Stocks usually they do pull back to moving average crosses before continuation. Now after that, look at this, the 15-minute chart, new 15-minute high, the 5-minute chart. You might tell me, hey man, you are always telling us don't go to the long side on a 3rd consecutive candle, but you did it right here. Why are you breaking your rules, making money and not letting us make money when we see that? Okay, I'm going to tell you why I did that. I remember when I told you you don't go into the long side on a third consecutive candle. What's the main reason I'm telling you don't go long on a third consecutive candle? Anyone? Why don't we go long on a third or fourth consecutive candle? Exactly, because a pullback is going to be expected, right, Gigi? Yes, Jenny. A pullback is going to be expected. And if you decide to chase a stock and take it to the long side on a third or fourth consecutive candle, what you need to do is give it a wide room. I knew that this will happen. This right here, I knew it will happen. Maybe on the next candle, maybe on the candle after that. But I didn't want to get a bad entry if it doesn't, because it could also just make this move right there and then make a pullback. So I wanted to get an early entry. I did get my entry right there, and I put my stop loss where? Could anyone assume where I would put my stop loss? Approximately? Based on the ranges? Candle low is decent, but it's not there. Below the green line? No, if it was below the green line, I would have been stopped out. 1470, okay, close. 1470 is close. Half of the range of the first candle, perfect. That's it. This is the range here. Sorry, let me draw it clearly. You could see a range here, approximately, and my stop loss is down here, down there. I told myself that if it goes into half of the range, because I know what's usually happening after a breakout, guys. After a breakout, stock is usually pulling back. Previous resistance acting as support, a retest, and then a continuation, right? Because of that, and because I knew that there will be a pullback, and sometimes the pullback goes a little bit inside the range and comes back up, I put my stop loss at the half of the range. Now this is so wide of stop loss, and I intended to add. I knew that this will be a huge risk to reward, and I don't want to just get, I don't know, 30 or 40 cents move on plug, which doesn't move a lot, only to get to 2 to 1. Now I see that we are pulling back. Right, we're pulling back. We're holding the 9 moving average on the 5-minute chart. We're coming back up. I'm adding to my position. And what do I have? I put my stop loss at the low, below the 9 on the 5. We already retested. That is my new stop loss. Now I have a tighter stop loss, which is good. Now we're coming back up. We're not forming a reverse ABCD pattern. We're coming back up. We're forming a W shape on the 5-minute chart. Plus we are forming a new range right there. You see the range? And I went into the long side for the break of the range, moving my stop loss to the half of the range. You see how I moved my stop loss every time? First stop loss was so wide, right? Second stop loss, decent. Third stop loss, so tight. With multiple ads right there. My average was somewhere around here after all those ads. So this was a tiny stop loss, and that is the reward right there. Now let's look at this. This actually was a hot mistake, but ignore that. Look at this. There was this candle which kind of scared me out, but I knew that this is normal. This is a parabolic reversal. Stock is going up parabolically, right? Fake breakout right there, new 2-minute low, and I knew that this would happen, but nothing to be scared about. No need to take partial at a new 1-minute low, because that wasn't even a half R. So just let it do whatever it does. If it works out, if it's really strong, you could always hold on to your position for a bigger run. XD unknown, I don't really know. I didn't take a look at it because I intend to continue trading. This was my only trade for the day, and while trading, I don't look at my PNL. I will take a look at it after I'm done. But it will not be less than 6, looking at this. Now, let's take a look at this one. Whose trade was this? Dardan. Dardan traded Snap. Snap has been in play lately, right? So it wasn't a bad choice to have this thing on our watch list. So the trade here was a mountain pass. First trade failed after you entered. Let me get the pen to the yellow. So you're taking it to the short side right here, and it failed, right? Took a second entry on the 1-minute shooting star, uncovered after a misclick, and then you took it a third time right there, which worked out so fine. Now let's take a look at this trade. First of all, the 15-minute chart. The 15-minute chart is sitting below the 200 moving average. Would I consider this the break of the 200 moving average? I wouldn't. Why is that? Because the 200 moving average is an average. Stock could get closer to it and drop, bounce out of it a drop, and it could wick a little bit above it and drop. So as long as it's around the 200 moving average, I don't consider that it broke it. I would really consider that it broke it if it really breaks it, pulls back and comes back up. This will be a break for me. Or if it really closes really bullish up there, pulls back on the same candle and comes back up, this for me will be a break. But being above it and then getting below it and coming above it and getting below it, this is not a break in my opinion, and it's actually holding the 200 moving average on the 15-minute chart or a level around it. On the 5-minute chart, you could see sort of an extended move, 3 5-minute candles after 3 consecutive 5-minute candles. A pullback is to be expected. Is this parabolic? No, it's not parabolic. In my opinion, this is not parabolic. This move right here, it's not parabolic. It's just by drawing the line. But how do I play these? I don't play them on the first new 1-minute low. I told you that if I see 3 consecutive candles and there is enough distance between my entry and the 9 moving average on the 5-minute chart, I would short it, but I would short it only after a mountain pass or a double top on the 2-minute chart or on the 1-minute chart. If his stock is extended from the 9 on the 5, but not parabolically, I would go against the 9 on the 5 on a small double top on the 1-minute chart, as long as it's still extended from the 9 on the 5. This is something I will update on my webinar for the future. And that's what you did right there. You're taking it to the short side, and you had a stop loss right there. I don't know why you exited a little bit earlier. Unfortunately, you're re-entering one more time, and the second time worked out amazingly well. So I like the first partial, add the 9 moving average in the 5-minute chart, and then you added, this is a mistake. Why is that? 1, 2, 3, 4. 4 consecutive candles. What is expected? A pullback. It could make a reverse ABCD pattern, or it could make a W shape. We don't know yet. Is it really good to exit all out at a new high? Not really, because no reason to exit yet. Now, I wouldn't have added on the way down. The mistake here is that you added on the way down. Remember what you said, always add after pullbacks to be able to adjust your new stop loss. And there it is, that's the pullback. It's making a new high, now you can start the count fresh. 1. So you would have added literally on the same place, right here. It's the same place. But at least you would know where to put your stop loss at. Right? Then you would add here, and you will catch the rest of the move down there. So everything you did was really good, no problem. One trade failed, in my opinion it wasn't bad, it just didn't work out. Second trade worked out really well. Don't add on the way down, wait for the pullback and add on the next leg down. TC, let's see what you did. Thank you for sharing your trade there then. So let's see what you did on AMD right there. AMD on the daily chart, look at this. I like this daily chart. Was this yesterday or today? This is today. I like this. You see that it's more weak than it's strong. It tried to go back up, bounced off the moving average, and today it made a new daily low. I'm definitely short bias on this thing, and you have a clear room all the way down here. You see how it actually even held it to the penny right there? That's a clear support in the daily chart and a clear range right there. Look at the 5-minute chart and the 15-minute chart. The 15-minute chart, you could see that there is a clear support down there. You see a descending triangle on the 5-minute chart, and you know that if it breaks the pre-market level right here, it will have a lot of room all the way to the next pre-market level. Yeah, that's pre-market level or pre-market low, which also coincides with that daily level below. Let's take a look at how you executed it. Where is your entry on the 1-minute chart? I can't see the entry on the 1-minute chart. Okay, this is the SPY, I see that. So that's your entry. The moment it's breaking and making a new 5-minute low, the moment it's breaking that level right there, you took the entry. You see guys, an opening range breakout isn't a 1-minute opening range breakout or 5-minute opening range breakout or 10-minute opening range breakout. It is a breakout. And I want you to ask you one question. If you are here, is Stacy here? Stacy? Okay. Would you have taken this trade to the short side on the very first minute? If it broke that level right there? Okay, I'm not sure if it didn't have such strong bias. Still want to see the first candle. Okay, so personally for me, If it happens on the first minute, on the second minute, on the third minute, on the fourth minute, on the fifth minute, whenever it happens, once I see this pattern, I will take it to the short side whenever it is ready. If it happens in the first minute, I will take it to the short side for a break of the pre-market low. If it happens in the second minute, it's always good, of course, to wait for 1 minute to close. But if it happens on the very first minute, I would take it on the very first minute. If at the open, it goes a little bit to the up and then it starts going down, I would take it to the short side on the 5th minute right there. Whenever the setup is complete, I would take it to the short side. Here, the setup was complete. On the second minute, you take it to the short side for 1 minute open range breakdown. Partialing at the moving averages. Unfortunately, there are a lot of partials right there. Yeah, that's actually a lot of partials. And then you exited right there. Did you exit? Yeah, then you exit and you re-enter. So yeah, I wouldn't have done that because it's clearly broke down. And what's happening after the breakdown? Oh, it's an ad, so you held on. Okay, that's good, that's good. Because after the breakdown, you could expect it to actually pull back all the way up there and then continue going lower. Since we know that it could do that, and it could pull back all the way up, there is no reason to actually get scared and bail on the trade. Just continue holding on to it. Once it's giving you the reverse ABCD pattern, you're having a 3-bar play right here, which is supporting your direction. Add to your position and ride the whole trend to the bottom side. Another ad right there, which is good. I like this ad. The stock dropped down, pulled back to the 9 and the 5, held it, came back down, made a new 5-minute low. You're adding on a new 5-minute low, moving your stop loss above the range, and you're exiting. This is an amazing exit. What is this good exit? Because look at this. High of the range, low of the range. Now it's breaking the range. People could take it to the long side right here and put stop loss at the half of the range. That's it. So you know they are, oh thank you Marcus. Yeah, they are on YouTube. Some of them are saved in the folder of the trade reviews, some of them aren't. I need to do that, but you could just open videos and go through that, search for the live trade reviews and they'll be there. Yeah, really well done, Tacy. Even the last ad was really good. Sam, let's see what you did there. So Sam traded AMD. And let's take a look at AMD. Again, it is the same trade. You see, Tacy took it to the short side here. Sam took it after the pullback. I personally wouldn't have taken it here. That was just so risky in my opinion. If the stop loss was tight, if you gave it room, at least for example, I don't know, for the retest or something like that, because we know that after breakdowns, stock could retest. And it could just simply make a new high, and then drop down. So yeah, if I take it to the short side right there because of FOMO, I would put my stop loss at least at around the retest area. You really got it to the penny right there. I'm really amazed and surprised. Good job. And then partialing all the way down. Now this is an ad I wouldn't do. Remember what we said? Don't add on the way down. Don't add on the way down. Always wait for pullbacks before ads. I know you added based on pullbacks, but those pullbacks are on the 1-minute chart on consecutive candles. It's always good to just wait for pullback on a bigger time frame and then get into the continuation. They are posted, but not in this folder. I'll include them all there today. After this trade review, I'll just select all the trade reviews we did lately, and I'll put them in that folder. But you could just open BBT channel, go for the videos, and search for trade reviews there. They're all on YouTube. You're welcome. Let's take a look at what Denise did. Denise traded HOG. Now this is good actual open range breakout. I didn't have this on my watch list. Yeah, I didn't have this on my watch list. If I had this thing on my watch list, I would have traded it for an open range breakout. Because this is one of my favorites. ABCD pattern on the 15-minute chart. I don't know how the 60-minute chart looked like. 60-minute ABCD pattern, new 60-minute high. Break of the pre-market high. Break of the pre-market high. I would have taken it on the very first minute once it broke the pre-market high and put my stop loss at the half of the range. And then add to my position after this small doji here, after the retest, that would have been my ad. Partial all the way up, and right here I would have been out. This would have got me stopped out. Let me see if it would. No, it actually wouldn't get me stopped out, because I know that stock could go all the way down to the 9 moving average on the 5-minute chart, not form a new low, and come back up. So yeah, if I take it there and I add to my position, my stop loss would be below this 9 on the 5, definitely. Another ad at the break of the high of the day, stop loss at half the range, and then just see whatever it's going to do right there. Okay, so let's take a look at this trade. Ivan sent us a trade, but he's not here. He wanted it to be reviewed, and then we'll take a look at Klaus's trade. So Ivan traded PTON. Oh, he didn't trade it. Let me actually see what he sent me in the email, because he actually attached this one. I thought it was his trade. Ivan won't be able to trade. Okay, let's see what his question was. He was wondering if I would take a look at one of the trades he wanted to take, but didn't, because it also contains one of the questions he wanted to ask. PTON looked like a good open range breakout this morning. Okay, let's see. It looked like a good open range breakout this morning, as it showed some buying pressure, and it was above VWAP and above the moving averages. The 5-minute open range breakout was bullish, and the break was also break of the pre-market high. So this break right here on a new 5-minute high was also a break of the pre-market high, and I guess that was his pre-market level. The blue line is the pre-market level. That's it. 5-minute open range breakout with the break of the pre-market level. The one reason I did not take it was that 15-minute candle. Let's take a look at the 15-minute candle. This one. 15-minute. The 15-minute 200 moving average. So he didn't take the trade only because of the 200 moving average, which was around 120.90, I guess. I see traders that sometimes trade into moving averages, and was wondering. Okay, now take a look at this. So Ivan wanted to see if I would have taken this trade to the long side for a 5-minute open range breakout, because it also coincided with the break of the pre-market high. The one thing which didn't let him take the trade is this moving average here on the 15-minute chart. Would I have taken it? Definitely I would have. Why is that? This week right here, it did a fake breakdown. It did break down, and it squeezed all the way up above VWAP on all the moving averages. Now we're forming a new range, right? PTO is strong on the daily chart, strong in the pre-market price action. It was holding above VWAP. It's strong on the 15-minute chart. I mean, on all the charts. The only thing ahead of us is the 200 moving average. Only thing ahead of us is the 200 moving average. I would take it to the long side, put my stop loss at the half of the range. If it's giving me the risk to reward, I'll partial. If not, I'll wait for a retest and I'll add to my position. If it works, it's good. If it's not working out, then let it be. Let it do whatever it does. You can't always have a picture clear setup. There will always be something ahead of you. It could be a moving average on the 15-minute chart. It could be a moving average on the 30-minute chart. It could be a daily level. I mean, you can't just have a stock which doesn't have anything ahead of it if you want to take it to the long side. There will always be something, and if there is nothing, then it's just an ideal setup. Just don't hesitate taking it. But you need sometimes to measure the power of the buyers and the sellers, and ask yourself this question: would you short it at the 200 moving average, like right here, right after it breaks the high of the day? I personally wouldn't. Why is that? Because it's the first consecutive 5-minute candle, and I know that the stock could make at least second, and sometimes it makes a third before it makes a pullback. So no reason for me to just force a reversal on it right after the breakout, even if we're having 200 moving average right here. If the 200 was here, that would be my target, and I definitely wouldn't take it to the long side right here. Why is that? Because first candle, second candle, and I know that the stock could make a pullback after 2 candles, and it could make a pullback after 3 candles. So yeah, it's not worth going for this risk, for this reward, when you're having this risk right here. Klaus, let's take a look. So Klaus traded Tesla, and let's take a look at this. This is good. I like this. Clear range, and I love this type of trades. Clear range, break of the range, take it to the long side, stop half of the range, take a partial if it's giving you a risk to reward, pull back, or a retest. Now here it wasn't a retest, right? But we know that it could get closer to the retest area, it could get to it, and it could wick a little bit below it. In this case, I would have added the same way you added, but I wouldn't put my stop loss at a new 1 minute low. I would put my stop loss closer to the retest area, just in case. Yeah, I don't want to just be so aggressive on these type of trades. Then partial all the way up, and after that it's just dropping down. Now look at the 5 minute chart. That is the retest area right there at around 10:30. Would I have taken it to the long side there? Yes, I would have taken it to the long side there. I would have actually held it for the break of the high of the day, which it didn't do unfortunately, and I would have exited somewhere right here at break even because of this new range we formed right here. We broke it and we didn't continue the trade. We got back down into more than middle of the range, and that would be a break even exit for me, not a max loss. I would not hold it for my max loss. Let's take a look at one of Kaiser's trade, right? We didn't talk about them for like 1 or 2 trade reviews. This is the way Kaiser traded HOG. Let's get back there. So first entry was in the pre-market, and remember when I told you like this was so clear on the 15-minute chart. It was an ABCD pattern on the 5-minute chart, on the 15-minute chart, on the 60-minute chart, strong on the daily chart. And that's why I believe Kaiser initiated his entry in the pre-market right there. Partial all the way up, right? Pull back. By the way, if you look, yes, there are a lot of partials, but look at this move right here. From 31 to 37, right? That's around 20% of the stock's price. That's too much. I actually asked him and I told him that today there were a lot of partials, unlike his trades. His answer was that he had really big share size right there, and this is actually a good guys psychological issue. I bet that any of us right here, if we are in a position with a really heavy size, our partials and our management will be different, right? You see, even Andrew, when he's getting in with a lot of share size, he partials fast. When he has a few hundred shares left, you see that he's letting it run, right? You see that he'll just let it run, he'll survive the pullbacks, he might add to his position, and then he'll partial at some particular area. So the big share size, it just makes us manage the trade a little bit differently, right? You can't just let all this big profit go without you, and maybe that was one of the reasons why he over partialed right there. Now look at this, pull back, and remember this is what we say. Stocks could go all the way down, not make a new low, come back up, and yeah, he knows that. He knows that the stock would make a pullback. It's not a reversal yet. I mean, it could be a reversal, we don't know for sure, but we need to trade probabilities, and that's where he added to his position, going up right there. Now these right here, I wouldn't have added, unless there is a 9 moving average. He doesn't use the moving averages, as you see. He has only the 50 moving average, if I'm not wrong, or the 200 moving average right there. But yeah, I wouldn't have added right there unless we're having the 9 moving average on the 5-minute chart. Maybe some price action on the time and sales, but what's amazing right there are the adds at the lows, adds at the lows. You see this, when you add at the low within a range, you could play the range. You could add at the low of the range, partial at the high of the range, add at the low of the range, partial at the high of the range, new range, add at the low of the range, partial at the high of the range, add the low of the range, partial at the high of the range, add the low of the range, and partial at the high of the range. This is a good way to play channels and consolidations right there. He's still in this position, and he said that he's actually aiming for 38.23. I want to see if it made it there. HOG. No, still not there. Alright, let's take a look at Adham's trade. I didn't ask him that question because we all just pick different share size according to our buying power and our risk tolerance, right? Okay, let's see what Adam did right there. Adam traded AMD, and that AMD was a reverse ABCD. We actually reviewed this one, and this is similar, right? This is where TC, if I'm not wrong, took it to the short side, and this is where TC added to his position. Now look at these guys. You see the why or how ads are effective? Before adding to your position, ask yourself this question. would I get into this position right here if I wasn't in it earlier? If the answer is yes, then add. If the answer is no, then just simply don't add, unless your average will still be somewhere down there. Right here, Adam took it to the short side. We had other member who actually shorted it at a similar place right here. And this is why this place with an earlier entry would have been a good add right there. Now, unfortunately, you get stopped out right here. And this was a problem for me before. Stock breaking down. After the breakdown, it comes back to my break even, and I exit because I don't want it to go against me after I was in the green, right? It's just that market makers are there to just play around with our emotions and get us sold out, right? They don't hunt our orders, but they know how we're trading. They know that we don't want to give money back and we don't want to take money early, right? So they will remember these guys. Just remember this thing. Each transaction, there is a buyer and there is a seller, right? I mean, there is no buyer without seller, right? So there is someone who thinks that it will go to the long side here, or maybe just covering his position, and there is someone here who is shorting it, who believes that it will go lower, right? And you are either right or wrong. The best will make money, right? And this is why you need to just understand the price action. Just draw the range. This is the simplest way to do it. I mean, I don't know how to simplify it even more than this, but this is just the last thing I could come up with. Maybe in the future I will come up with something even better, but the easiest thing you could do, draw a range, break of the range, stop loss half of the range. Just hold it unless it gets here. You will get out for a small loss. Your max loss is there. I bet that was your stop loss. You'll exit for a small loss, but it's better than letting all this winner go without you. You are welcome. Do we have any questions, guys? Ayman, was plug on your list, or how did you know to watch it from the scanners? I had on my watch list Netflix, JKS, SPY, XLNX, plug, and GMIA. The ones which I was watching closely were GMIA, Netflix, JKS, and XLNX. Plug was just something I came back up with later because I didn't see that the stocks which I was watching were forming anything I like. So I have a big list for stocks I'm switching around during the day if I don't find anything interesting. It's more than 20 stocks. PTON, PNN, PINS, INTC, Microsoft, Tesla, Apple, a lot of stocks. And if I see like there is literally nothing happening on some of the stocks which I'm watching right now, I just start switching from one stock to another, to another, to another, and another, till I find something interesting. Does that make sense? Perfect. So, any more questions here or guys on YouTube? If not, or if yes, can you explain what you look for on a daily chart? Okay, that's good. For extreme reversals, what do I want to see? I want to see that, let's say I want to take an extreme reversal to the long side. Where is my pen? My pen freezed. Let me open the Epic Pen one more time and I'll explain that. That's it. So look, let's say I want to take an extreme reversal to the long side. If I want to take an extreme reversal to the long side, I want the stock to be uptrending on the daily chart. This is the daily chart. Now, this is the daily candle. I think I should have made it on the black, but yeah, I'll start using the black. So this right here is this, okay? And for some reason, today, intraday, it's selling off. Once I see that there is a reversal pattern, for example, a double bottom with the second bottom higher than the first one on the 5-minute chart, I would take it to the long side. My target would be view up and the high of the day. my first target would be view up. I will not take any partial before that. If the stock on the other hand is downtrending on the daily chart, and then intraday, this is what's happening, it's selling off and then it's making a double bottom with the second bottom higher than the first one, I will not take it to the long side with the target of view up, because it's just going with the direction of the daily chart. I will not really expect it to, after this huge drop, to close today as hammer. It could do that, but how likely that will happen? It didn't do that for 1 day, it didn't do that for 2 days, it didn't do that for 3 days, it didn't do that for 4 days, and my chance is 1 out of 5, or maybe 1 out of 10. It's not worth trying to force a reversal on a stock when it's just moving intraday with the direction of the daily chart. If the move intraday moves against the direction of the daily chart or against the direction of the gap, that's when I'm going to be interested in an extreme reversal. Now you might tell me this stock right here, it gapped up. Would you look at an extreme reversal for for example, later on the day with the target view up and above? No, I will not. Because this daily chart is forming a reverse ABCD pattern and I actually expect this thing to close red. It could do that today, it could do that tomorrow, but no, I will not really expect that this thing will come back all the way up there and close as a hammer, because it's on a weak daily chart. Did that answer your question? You are welcome. Can you explain what you look for to determine if you should continue to hold a partial or close the position 100%? I always partial at the beginning, worry about losing potential profits. Okay, so it's the same thing but to the opposite direction. Let's say that the stock is uptrending on the daily chart, and today, this is today's candle, it's also uptrending and it's pulling back. This right here will not scare me out. This pullback will not scare me out. Let's say I took it to the long there, I took a partial there. Today it's pulling back, then it's coming back up again. I'll actually add right there. I'll partial there, I'll pull back, and I will have ranges. I'll always draw ranges. The first range, the second range, for example, now we're coming back up, and I'll do that. Yeah, no much, just look at the drawings. Okay? Now, my last partial, or my biggest partial in this case, if it starts getting heavy, would be on the third leg up on the 5-minute chart. So this is the first leg up, this is the second leg up, and then right here, I'll be taking most of my position out. Before that, let's say I took my entry here, I took a partial here, I had an add here, I took a partial here, I had an add here, and look at this, you could draw ranges. We had a range there, we broke the range, we retested. We had a range here, we broke the range, we kind of retested. We had a range here, we broke the range, and let's say we're getting down into the range. I'll just exit the rest here. I'll not hold the rest to break even. Make sense? If the stock is downtrending on the daily chart, and today it is going up, I will not hold on for a big move, because I expect it to just go a little bit up and then maybe make a double top or something like that and go with the trend of the daily chart. In this case, I will not hold on for a big trend, like what I did here on plug. I didn't hold on for a big trend, I just waited for one leg. This is the first leg, this is the second leg, and I'm done. Just no need to just continue holding on for a third or fourth leg right there. We're already getting closer to daily levels right there, closer to the moving average cross. The stock is weak, right? And today it just broke up, which was not bad, but yeah, overall, look at this, it's just weak. Overall, it's weak. You're welcome. So, trade safe everyone. I'll be in the chat room. If you have any questions, feel free to email me always, ayman@bearbulltraders.com. And I'll make a recap on this plug trade. It will be posted on YouTube today as well. And have a good day. Bye bye.